So, I want to introduce you to my noble trading plan because, like, it took me way too long to figure this thing out, and it's the most simple thing ever. I got way too, I would say, I got way too confused with like all these different ICT concepts and what do I want to do and stuff like that. And yeah, it's fairly simple, but like if you haven't figured it out, then ICT can be just like a little bit too much of a confusion for you. So don't, first of all, don't, um, I would say, do not try to implement all of ICT's concepts. It's like a suicide mission. You're not going to succeed with that because like there's way too much stuff, and as a beginner trader, you cannot like you cannot become profitable with any of that if you try to do all of it at once. And there's really no need to do all of it at once. I have like a couple of ideas, and then I use my experience to kind of figure out like rest of it. But this is really like a fairly, I would say, mechanical. Like it's not mechanical in the sense that you just are brainless at the charts and like react to price in that way. But like, yeah, I will show you. So first of all, I would let me just do this. So I would recommend you to kind of do this kind of thing where you have like a piece of paper and then put like check boxes like that and all of your rules for your trading plan. I kind of have that type of thing here. And so yeah, just write your rule sets down, and when you're trying to get into a trade or something like that, then you just kind of then you just kind of can check off those boxes or kind of see if your trade follows those that outline that you have done. But I will write my rule sets down as well here because this is not very complicated strategy. It's basically just ICT 2022 model, um, and I also utilize IFVGs. But the problem with the let's say ISD 2022 model is that it's kind of based on rules, but it's when I watch like the 2022 playlist, I kind of don't get the exact rule sets. Like I don't like it's a little bit too vague, and you kind of need, at least to my experience, you need some type of like a very like firm structure to follow, and this is the reason why you need to write down your rules. So I'll write my rules down and then we will move accordingly. So the first rule is, I mean, I would try like my trading plan. There you go. Then we would put, so I would put like this kind of check boxes here, like that, and then we write down the rules. So first of all, the assets that we trade, it's futures. More specifically, I trade NQ, sorry, NQ/ES. So that's very simple. Now we have the assets. Now we need to determine our trading hours. My trading hours are from 9:30 to 11 a.m. Okay, these are just like the first rules. Doesn't really tell what my trading plan is. You can't even tell if I'm trading ICT when I show you these kind of things. But we will continue. So let me actually make this a little bit larger. Uh, yeah, this is fine. So then you have your timing. Now what is my model that I trade? Well, 2022 model. So you kind of have to know what this means, but if you don't know what 2022 model is, then you should really just study a little bit more. So basically, uh, let's say this is sell side liquidity here at this price point. Market comes down, sweeps the sell side, shifts in structure, and I get in break of structure and fair value gap entry here counts as ICT 2022 model. Another entry for 2022 model is like when you look at the markets as like market maker models, you can just kind of see additional entries. Like this is not the only entry for 2022 model. You can also enter like in here to another retracement and stuff like that. But yeah, it's fairly simple trading plan. Why I told at the start of the video that I also use IFVGs is because sometimes you may like sweep the liquidity like that, and then look at the last price leg that broke to the downside and swept the liquidity is fairly large like this. Now what I have found is that, okay, if you want to wait for break of structure above this high, there is a chance that it breaks structure, makes a small like a retracement like that, and then shoots, and then if I try to get in down here, you just don't get the entry. And quite often when this is the case, and let's say we get like a large fair value gap in here, market will actually flip the gap, inverse it, but it doesn't really break structure. But if the inversion happens in here, then you can just enter from the inversion once the market kind of comes down there. So to my strategy, I don't always need to see the break of structure to the upside. The inversion fair value gap is often good enough. So, but yeah, slash IFVG. So then that simple model, you don't really need much more. Then a couple of important things like what I like to mark out with my strategy. True opening prices and opening range gap. So what this is true opening prices are midnight opening price, 8:30 opening price, and 9:30 opening price, all New York time. And opening range gap is just when market closes 4:15 p.m. and then it opens at 9:30 p.m. That's just 9:30 a.m. That's just the difference between those price points, and I will show you examples of this trading plan and how I go with it. But yeah, then 9:30 open, I like to mark out my first presented fair value gap. First presented fair value gap, then SMT between NQ and ES. I don't really look at DXY. Doesn't really bother me. Maybe it has some benefits if you look at that, but SMT with NQ and ES between those two, it's just fine. And this is basically the whole trading plan. Like I can write this down in my business card and start basically making money with this exact thing. And this is so simple. You don't need like new week opening gap, new day opening gap. I don't know, all these different things. Like I just enter from FVGs. Let's say I do consider like breakers and such, but I don't really care about them. I don't really care if there is or isn't a breaker, let's say. So fair value gap is the one that I'm interested in. And yeah, I can show you kind of like I guess, like an example of a trade that would happen and how I would kind of go forward with the trade and with the trading day. So let's say here, this trade that I took last Thursday. So how I would manage this is I start my trading day. Price is trading somewhere here, and what do I do? Or actually, let's not do that. Let's just do this with live price action. So live price data. So I go to 15-minute chart because that is like the chart that in which I can mark out my 8:30, 9:30 opens and midnight open, and also the opening range gap. So let's just do this. So live price action data. Let's look at this. So let's say from like Friday. Okay, what is Friday doing? I mark out 9:30 open, which is this candle here, 9:30. Okay, 8:30 next, which is here. We trade down, so the open is here. Then the midnight open, which is this price. Now, how I utilize these prices, I'll show you in a minute, but if you know the power tree concept, it's basically like, let's say I'm trying to take shorts and we see that price is manipulating above the 9:30 price, let's say in here. Let's say this is 9:30 price. Price manipulates above it, and now I'm trying to look for shorts anyway, so this is a good sign that this is a manipulation price like higher because we are above this price, and then we move lower. I'm not going to teach this very like thoroughly. The YouTube is full of this content, so just look for it. But if you don't know all of this, but I'm not trying to teach you the strategy. I kind of assume in this video that you already know the ICT concepts, and I'm just trying to give you like a basic rule sets for like a good trading plan. So yeah, midnight, 9:30, 8:30. Then I like to mark out my opening range gap. So if you trade the CFD as like maybe you don't have the live data for your futures, which I don't, just look for your CFD, see where the market closed or the candle closed at 16. So look at the 15-minute chart and look at the 1600 candle there, and it closes above here. So then you put the opening range gap, and the opening range gap is done at the 9:30 open there. So now we are left with this kind of huge box. I really don't like this, so I usually just shrink it like this. And now we are in 15-minute chart, but when I start my trading day, I just go to 1-minute chart, and I can kind of see how the opening range gap has formed here. So then, okay, this specific day, I was bearish, and you can see what happens. 9:30 open, which is bump higher, go higher, go higher. We never really retrace. We are at Friday. I'm bearish. Okay, what I'm trying to see is maybe a short. So maybe I could try to short this. And how I use these midnight and these true opening prices is that I'm not like I'm bearish. So if we are trading above all of these prices, that's extra confluence that shorts are possible to happen now. And that's exactly what happens up here. The problem just in here is that this is kind of like a trap. Trying to short in this, you lose every time you try to short, but the good thing is that market doesn't really give you an opportunity to short either way. The first opportunity to short really, I would say, is this, and it actually works out, so that's nice. But yeah, opening range gap is also a big reason because we never really retraced into it. Like if we print opening range gap, especially the larger it is, kind of better. If you're trying to look short, let's say up here, the fact that opening range gap is not filled is very good sign that you want to see some type of price action into it. And yeah, what else did we have? First percentage fair value gap. That's pretty much just like market opens. Um, First percentage fair value gap has to be the first. It's like a 3 candle pattern, and the first candle of that 3 candle pattern has to be at 9:30. It can't be like a fair value gap with the first candle being 9:29. So for in this case, this is our first fair value gap, and today specifically, the first fair value gap doesn't really provide much for me. But I like to mark that out because that is often a significant fair value gap that we use and refer back to. You can see how we trade in it here, but okay, we drop again, and look how we respect this gap again. We reject from it, break away from it, get back to it, reject from it, reject from it. Like this is a very important price point, and that's why I love first fair value gap. And then really the last thing that I like to look at, and one of the most important, is SMT for me. So SMT, let's say you want to go for long. Okay, NQ takes the low, ES doesn't. This would then be SMT, and I would be super like convicted that we are going to go long. So this is very simple trading plan, and you can really literally just write these things down and like follow these rules. And like if you're willing to put time into this, just learn these concepts from YouTube. Look, I see these videos and concentrate on these specific concepts. Obviously, like when you're doing like top-down analysis and trying to look for weekly, like weekend, you're trying to look for like determine your bias and such. Yeah, other concepts like new wick opening gaps and stuff are important as well. But for example, this day we put on a massive new wick opening gap. Okay, for me this means something. Okay, so I'm kind of bearish because of this, but this could mean that if we break above this consequent encroachment, we're probably going to consolidate today. If we quickly accelerate away from this, maybe we are not going to get back into this fair value gap, this gap, until we take all these lows. So some things you kind of have to learn as well. But if you kind of know all the basic ICT stuff, you're just not sure what kind of trading plan to use, then I would say that this specific plan that I wrote here and this plan that I use is very good.